Hello, hello, good morning. Welcome to another eSpiritus trading video. This is, or today is Friday, September 15. It is 9:15 Eastern Time. Finally, in 10 more minutes, September contract is going to be over. No more September here, and December is taking its place. Something, if you have observed, you've been aware, something that is kind of, I believe, unusual. I'm still going to say why. The difference between the September, this is September, we have 4,500 here. It's right about around, it's trading right about 4,500. But this is going to be thrown out the window in just 10 more minutes. So there's no more this. And what's taking its place is this one. Notice the difference. Now let's round it up to 4,500, and this is almost 50 points higher than the other one. Now, that only that piece of information per se doesn't have any relevance. But when you see, or when you open these charts here, when I was doing my homework yesterday, this is what I realized. We have this is the adjusted contract, right? Notice what it is. And the monthly, the weekly, not too much. The weekly is having a breakout, for example, having a breakout out of this range, right? This 5-week range to the upside is still trending higher. The trend remains to the upside. The breakout is inside the range, inside this 12 or 13 week range. The monthly trends to the downside, 3-month range. But what I am paying attention is to this, to the daily. Notice where it came from. It's coming from the 50. This is the adjusted contract. And this range down here, the range up here, another one here, and this is just boom, 50 points gap here when the rollover happened, the adjustment. But, and this is when it becomes interesting. This is the adjusted contract, and this is the December contract. Notice where it is. I mean, right in the center. Right in the center between these two ranges. We have one range here below, just above the 100, another range here, just above the 50, and another one that has formed here, just below the 50. Very mechanical trading. Very mechanical trading. Notice it's sign that it is just short time frame money, not bigger money involved here. The difference between this chart and this chart, most traders will be watching this. Because a lot of retail trades bar charts, candlestick chart, they will see this. They will say, oh, there's a huge gap, it's been bought from the 50s, but actually it's not even above the 50. It's just breaking, just below. There was a trend line here that was forming, and there's a breakout out above the trend line here. 1, 2, 3, 5 days that can be put below this trend line. The same way it was here to the upside, the same was it's happening to the downside. There was some really interesting thing that happened yesterday, which is, I guess, it's too late now, but I mean, too close to the opening. But there was some really good absorption. Incredibly high volume. in September contract, to be a contract that is expiring in just one day, there was tremendous. Oh, this is not. There was tremendous amount of volume. What is this? Mm, tremendous amount of volume here. Thousands here. And these four levels yesterday. Clearly, there some interest in keeping this market higher. And the thing is, if this amount of volume would have come, this is September contract, this is September, would have come in the current contract, that would have been a different story, right? Because that would be somebody that is you're willing to bet on what's going to happen in the next 3 months. No, the thing is, it was made yesterday in the contract that has 5 more minutes before it's over. That was the interesting thing to me. Right? Now, yesterday also there was a huge amount of absorption here. When the market came down here, you could see that this is what I wanted to replay. And this F low has a tremendous amount of volume here. I was kind of, and this is what sometimes tends to be that give us biases. I was just waiting, kind of wishful thinking. Okay, I hope the market can take this low, this F low, take the volume from here, drop somewhere in here, and that could be a buy, or even below hard back, but not taking this low. That would be a buy. It never happened. Rather, why I was wishing that to have maybe a spike in later in the session, but it didn't happen. Things are always changing. Okay, the market yesterday, is a strong market after having this gap here. First, doesn't close the gap. Second, has a breakout of this 6 days range, and it doesn't come back. It did come back. It did come back. Good. It did make exactly to this hardback. Maybe this could be coincidence, but the fact that come back inside the range, I didn't like that. And now, the overnight has a tremendous. I hope you catch this. Time after time, you will see something. This in context is really nice here, because look how many times this market has been bought here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 14, 15, 16, look at this still was almost 17 times bought from this level here, which is, name it, could be last. But this is incredibly weak, and having the behavior that this market has had before. Yesterday, the overnight from yesterday got a pullback exactly to overnight hardback, and before that a pullback to last this day as well. This day here has the same thing happening, and there's no excess down here, no excess down here, and no excess down here, and it's just too much. Now, this market has only 1, 2, 3, 4, 5 days stop with volume. The volume, and this is also something really weird that I haven't seen before. For the last day of the contract, this volume is really low. Really low. Notice what usually happens. I'm going to put this on. These are the contrast change. This huge amount of volume is what usually happens. You can see these are contrast change. And having this yesterday, come on, man. You can see there is something going on here. If that doesn't happen yesterday, today can be a day that we can have some huge volumes. As I say, this week is weird. It's always weird. You have to be very careful when we trade this week. You either step away or be very, very careful when trading, because it just makes no sense sometimes, or most of the times. Let me put this one back. Where are you? Here. this is what catches my attention. But there's something here also as well. Volume is increasing, and still increasing volume. This cannot be coincidence. Each day is coming more and more. And very nice increase in volume. Something is happening here. Something subtle is happening. There's a breakout now. We have a breakout, right? Breakout of this range. In the same way, how we have this range here, you have breakout to the upside and comes back into range. And yesterday we have a breakout. We have this range market trades but pulling to the upside. There's a lot of stops here, and then the market just breaks from that. This kind of dynamics happens in the daily time frame as well. In all time frames happen that way. All time frames. Now, 4 more minutes before the opening, all of these longs here. All of these longs here. All this inventory has been retraced. From yesterday we have spike to the downside that was retraced as well, and from the previous day we don't have another spike from all the way down to here. The market was bought right from the base of the spike. Right from the pullback low. Now, I hope you remember this. This market is extremely big. Now, the market closed way up here, traded above. All of this inventory has been, you can consider this is out now. Now, check this out, man. My God. Now, the market is going from one situation to another. What's happening with the bond market? Are you very interested to see what's happening with the bond market as well? This is short covering. You put these 2 days together, this one and this one, short covering. It's trying to recover. I don't know how good can the daily. The market, the bond market is not out in the open yet. This is in the danger zone. The market, the bond market is in the danger zone there. Be very careful there as well. Okay. And 2 more minutes to the opening. All of this inventory from yesterday here as well. All of this inventory. There's a lot of longs here that were trying to take the market higher here. They were trying to market higher here. Now we're underwater. The same thing that happened here. When this market took these stops out and then break, there's still a lot of stops here. The same thing, I believe, is happening today. The lack of volume of this market, the lack of volume of the years, not the market, or the lack of volume is, the other thing. Okay, so I can talk about this a little quick before the market opens. Let me bring this back here. Having this amount of having this gap here, this fake gap, the highs are not that far now. It's only 100 points. It's not that high. It's not that far now. But this is a fake gap. There's no change in the market. Gaps are a sign of change. There's no change in the market. This high seems to be so close now, so close. Can you see how close it is? Really close. But the market needs to have, if the market is going to come all the way up to here, it needs volume. New volume. There's nothing up here. Okay? There's nothing up here that can fuel any kind of rally to these highs. It has to be new buying. And so far, this market hasn't had nothing. Very thin markets. Very thin markets. Now. Now the market is open. This is huge. It's open inside. The market is very short now. Inventory is short. Overnight inventory has been rebalanced and got too short. I think it's too short. Market is still inside previous day range. Indices have been adjusted to the downside. After this break. Now, the most important thing to me was this low here. Let me open this. What I mean with that is this pullback low, the market has a pullback low here. If the market doesn't take this pullback low, it's still an upside market. But market, look at where the market has opened today. Look at where it has opened today. Right below this pullback low. Okay, everything up here now is either has been erased. All right, and now this is a new thing. Now the market has rejected this action that we have yesterday. All this movement to the upside that we have yesterday has been rejected. Now, granted, we had these contracts, all that stuff, right? It's all over. Today is a new day. Everything is different now. Now, regarding volume, look at this. Look at this. Look at the amount of volume we have at the open. Tremendous amount of volume here. Alright? This is quite a thing here. Alright? It seems like 2 days ago we are going to have this tremendous amount of volume here. Yes. Let's see how this day plays. Alright? Now everybody is short in the market now. The market is back inside this range. The market is being bought from the overnight low. End of the week, inventory was long yesterday. It's too short. It has been liquidated from all the loans from the overnight have been liquidated. And the remarkable thing, again, I guess the most important pieces of information that I have today is the market is back inside the 6-day range. Okay, but it's still inside. It's still inside. Value is lower. Okay. Do you remember the breakout here? Can the market be bought from here? Or is the market going to have an upside trend? Who knows? Who knows that? Nobody knows that. The bond market is... I want to check that. Alright. Also, don't forget the absorption the market had yesterday around the 50 SMA. I don't know what to do of that. Value is lower here. This was a nice play. This was a nice place for the overnight. You don't see this quite often. You see this time after time, and the context of this is quite unique. You know, quite unique. Very, very nice play today. I hope you were aware of what was happening in the overnight. Any questions, please? Just let me know. Now traders got very emotional here. They saw the market breaking. Oh, okay, the market is going to go. The market is going to do the same thing it did yesterday or the day before. Well, I saw the breaking here. It's crazy. These are very thin markets. Very thin markets. This look like X's. Notice also how the high this overnight is. 1, 2, 3. How many times I was bought or sold from the highs? Exactly the same level. Exactly. 1, 2, 3, 4, 5, 6, 7, 10 times. 16 times here, 10 times here. My God. I'm not saying the market is going to come back all the way up to here. Can it? Yes, it can. Remember, the market needs volume to go up there. Today is going to be, it seems, okay? It seems also that today is the day that we're going to have huge amount of volume. I am trying to verbalize all my thoughts, acknowledge all the information that I'm seeing and catching, and I'm trying to remain neutral here. By now, traders have made multiple trades. What do you think most of the traders were doing now, or are doing now? Huh? Why you have what traders, if you are short in this market, why did you not short up here, somewhere in here? No, when you saw all these levels here, gosh. We have to be aware. We have to be aware of what's happening, rather than trying to guess what the market is going to do. What happened has happened. What will happen hasn't happened yet. What matters is what is happening now. Notice the tremendous amount of volume the market overall has. Tremendous amount of volume. Only 10 minutes in the period. We still have almost 2 more quarters, 2 more trades to go, and the market almost has the same volume as yesterday. But wait, if this remains, this is 1/3, 2/3 should be up here. This could end. This period could end way up here. 1/3, 2/3, yes, it could end way up here. Something like that. And that could be something here. And that really is bigger participation here. That's bigger investment or bigger capital being moved. If you are long, how do you cover your position? You sell, huh? You sell to cover. Let's see if it gains downside momentum. It's trying to break. I mean, this is the other thing. A weak market just doesn't stop here. Can you see how many times being bought from this level? A weak market just go through this like hot knife through butter. Did you see where it was bought? It's right here. It's being bought here. I don't trust this market. If you are not short here from this level up, this could be a quite thing. Very treacherous market. Very treacherous market, man. Questions, answer, please let me know. Any comments, that would be nice to hear. Hope you're doing well. Now there is there is something today at 10 a.m. we have consumed confidence. That should be an irrelevant release. But who knows? We never know. We never know. I'm going to update. I'm going to update the title of the broadcast. Market update plus consumer sentiment. Okay, the lower overnight low has been taken. Alright. This was not a good low. Alright. Downside continuation. We see the market taking this low, taking this pullback low here from the overnight yesterday. Next one PRC, next one this another pullback low, then this late rally high. This was relevant for this day. Not too much. I guess the next thing would be hard back, another, the Basel spike from this day, Basel spike CPI, remember? Do you remember that? And this huge prints, single prints from the overnight as well. These were all news based. Movements, rallies and breaks. And those kind of movements can be replaced very quick. Alright, half back, half into the first period, and the volume we have is about half. If it is remain, this is I am watching as well. If half is 40.74, it should be 950, around 950. This is a little bit higher, right? God bless you. God bless your soul. This is how this one. Okay, should be all the way up to here. Let's see. If volume is still here, it should come all the way up to here, somewhere down here, right? But if it dries and ends up here, that would be something to pay attention to. It will be incredible, weird as well, crazy. Now, tremendous amount of volume at the opening, right? After the market open. If the market is having this break, gigantic break, this is one reading. The market is having this tremendous break here that almost took the whole range the directional moves to the up to the downside, and you put more volume to that, this should come, or this should have been down here already, but it's not, right? So there is something here, right? Some time frame trading, or some time frame traders are doing one thing, and another ones are doing another, something completely different, the opposite. Who knows? Trying to guess what people is doing I think it's not worth. But it's important sometimes. Okay. Oh, we have it right there, market survivor. Previously, the low has been taken. First pullback from yesterday, the overnight low. This low is extremely weak here. Very, very bad low here. It's a pullback from the overnight. It's yesterday's low and today's low as well. That's 3 wide low here. There's very, very low odds that remain for long. The good odds they're having, that's not to be taken. Rally from him will be something really bad as well. But, you know, quite the day. Quite the day. Now, the scenarios here. The daily has looked below, two things, has looked below, okay, today, the intraday, has looked below yesterday's range. If the market comes back inside yesterday's range, the potential destination is the opposite side, which in this case is the upper side. Now, in the daily time frame, the market has re-entered the 6-day range. It's the opposite. Can you see? The market has looked above the 6-day range and now has come back inside, which targets this low. While the intraday has looked below here, it's coming back inside, it can target the opposite side. I'm not saying that's going to happen, but just there are those two things that are happening. Two different approaches. Whatever it is, whichever it's going to be, whichever it is happening, just try to be in sync with the market and be aware of the other possibilities as well. The market has come back inside the 6-day range. The potential destination is the opposite side of that range. Consumer sentiment comes in 7 minutes. Usually that's not it's not such a relevant number, right? But it is markets are just looking for excuses, right? They're looking for not excuses, catalytics. The consumer sentiment is high, but mean, that people is thinking the economy is doing good. There's nothing to worry about. That can give room for the Fed to keep doing what they're doing, right? Either keeping the rates high or even considering rate hikes. Now below, what do we have below? This is the daily time frame, okay? Daily time frame. I'm going to remove this. What we have yesterday is this low, this accumulation volume here. The one market to take this pullback. The market has come up below this pullback. So all this action has been invalidated. I want to remove this intraday periods here. You can see accumulation volume here, but what's more relevant could be this volume here. Why I have this is I can see here, for example, there's nothing here in there, but I notice the amount of volume, 200 contracts, 200, 450 here. But notice what we have here. This is, where's Thursday, where's Friday? This is Friday. Last week it starts to have some volume, gaining something more, and this is when it becomes full. The same contract comes full. Volume here, market comes back, didn't check that, price, rallies. The market comes back this day, didn't take this volume out, it just is sold from this one, barely takes this one. Now, this is volume, and this is volume. If the market is going to rally, it has to have volume, new volume, buying. Now, this could be the direction of, I'm going to change this. The direction of move. If the market doesn't take this low and do something like this, it has taper here, taper, when the market comes in here, there could be something to the upside here. We have a tremendous amount of volume here from yesterday. This volume has been retraced. Right? Or you can consider this always a short market. It's coming down, gaining volume here. Notice how much, this is not the amount of volume we have here, 50,000, 70,000. This is not usual. It's a lot of volume. For a thin market, there's a huge accumulation volume up here. Now, so far we have 10 things here, and the market is coming here. I want to see something. How come? I don't know. Let me see. This shape, for example, accumulation volume, high volume. This is not the number, just a shape here. Just pretend that you see something like this. Right? This profile is truncated, and you have accumulation volume here on the lower side. Just pretend this part doesn't exist, right? Just pretend what is below this line doesn't exist. You will see accumulation volume there. I don't want to see something like that coming here, because if volume is accumulated down here, there are good odds that this level is going to be taken, and that in turn can target the lower side, the opposite side of the range. And also the lower side doesn't have much. There's nothing here, nothing here, nothing here, nothing here. And it has to be new volume buying. And today there's a day. It's a day that seems like it's going to have a low amount of volume. Notice how volume is drying here. 5 more minutes. I don't think in 5 more minutes the market can come back, can come all the way up to here, maybe to here. Right? Has is decreasing, but it still is good. If the market comes back, that's almost 40% higher. Is it? We'll see. We will see. Now, just getting the mind on traders on this market. What do you think traders are doing now? Yesterday, traders were trying to buy the market, buying, trying to break. because the market break this day and it opened the gap to the upside. Now, I am not going to miss the break. I'm going to be long here. If I'm being short, I'm going to be long here. And that's what happened to these traders here. What's happening? What are they doing now? Can you see what they're doing? But today is a different day. I don't like to trade these days. Weird things have happened. Usually the whole week is like that, but this day or the day previous, which was yesterday in particular, are case for those things. And let's have some patience here. This can be a long and a short here, for example. You have a structure here. The market comes back. The next time the market comes back and doesn't take this low, I mean, this will be my exit, right? My stop is here. The market comes close to this. That's my exit. But I don't like, to be honest, I don't like how the market is being traded. It is just, it's just taking too much time, man. It's still taking too much time to take this low out. All right. And something that I have noticed, I hope you have noticed this as well, we have to be checking the market, trying to get and seeing, and also when we do that, when we have that goal in mind, we may see some changes, something that's happening. What I say is, the reason why I'm saying this is the corrections in the markets are happening pretty much like every somewhere between 7-9 days, we are having big corrections. When I was with Gene, he used to say that the week has usually there's like 70%, 60-70% of the days that are rotational. Most of the days are rotational or have some form of rotation in it. Only one day a week, we may expect some kind of like big movement. With the kind of volatility or the kind of movements we are having in this market, that is what I saw, right? It's happening somewhere between 7-9 days. Now we have this adjustment of this inventory, for example, after 6 days here. This inventory, the longs here, 1, 2, 3, 4, 5, 6, 7, 8, 9 days before being adjusted. Alright, consumer sentiment in less than a minute. Let's see what happened. Now value is lower. The market has got inside Wednesday value area. The market is back inside this area of value from here to here. You have this 1, 2, 3 days. Come out yesterday. Now it's back into it. Okay, so you will have 4 days down here. Okay, consumer sentiment is out. Not much. Notice where the valley was sold from. It came from, somewhere in the road part, and it was sold from Orlando. Okay. Now, what I like, something that I would like here is the market has come back inside previously range. It has come back inside previously range. I still don't see anything here. The first trade was that overnight, taking the overnight inventory out. But so far I didn't see anything else. Inside bar here. But I can see there's sale here. Not a strong selling. How much volume? Well, this is not what I expected. I mean, expected relative to how it might go. It's a really huge opening here. But how much is this? This is about, though? Is it about 50% higher? Let's check. Let's check how much higher it is. Ooh, 50% high. 50% high. That's a lot of volume there. In a day, I don't know if you have to call, I should call this a regular day. Officially the contract is over, September is over. The new one should be as any other day. But I don't know. I to be honest, I don't know how. I don't want to label this day. I don't want to put another label other than the weird day. Weird things can happen here. Be careful here. I want to see what the market is. The market has come back inside previous day range. That's the thing. Is the market going to print an inside bar? So far it's an inside bar, but only 5 minutes into the second period. I'm going to make myself a cup of coffee, come back in a moment, post something in Twitter, and I'll be back maybe in the next 5-10 minutes. Huh? See you. Silencio. Cuando miro tus ojos y beso tu piel. Sensible, me adormece tu voz, sentimiento increíble, yo regreso a tu voz.
just outside of St. Louis. GM, Ford, they're both offering the UAW.
And I asked Mary Barra this morning, you've offered that. Can you go higher? She didn't want to negotiate in public. But then I said, you've also heard from the administration about this. Give me some sense of what they're telling you and your sense of how quickly, potentially, something could be resolved here with this strike.
I've talked to many members of the administration as well as members of Congress. And, you know, we're at the table. We're problem solving. We want to get this done. This will not be good for the economy overall. And again, for all the communities that are impacted, you know, from when a plant is in their city.
As you take a look at shares of GM, Ford, and Stellantis, a couple of things to keep in mind. First of all, we will not be having any contract negotiations today. Second of all, we will be hearing from the president regarding this strike in just a few minutes. Guys, back to you.
Just on the expectations here, Phil, of this targeted labor action, maybe that's why the stocks are faring a little bit better today and people are less worried about the impact of the economy. What is the strategy there, and was this expected?
Well, look, that's the big question. Is Shawn Fain planning to do another targeted strike at some point? What he has said is if there's no progress on talks, we may decide to hit another plant. Doesn't mean they're going to hit all automakers. It could be that they want to shut down another Ford plant or a GM plant or a Stellantis plant, depending on how negotiations with that particular automaker are progressing at that point. The reason I don't think we're seeing a huge impact on the stocks is that overall, I think this has been, to a certain extent, baked in. Now, if we see this strike stretch out 5, 6, 7 weeks, then I think it's a far different equation for investors. But that's my take at this point. And guys, I mentioned that we'll hear from the president in a little bit. I should mention we're going to be hearing from the president next hour regarding the UAW strike and what's going on for the big three right now.
Yeah, the timeline was a little fluid this morning. We'll keep an eye out for that, Phil, and we'll check back with you very soon. That's our Phil LeBeau in Wayne, Michigan. Let's keep that conversation going this morning. Joining us today, former Ford CEO and CNBC contributor Mark Fields. Mark, it's great to have you. I do wonder, to Phil's point about, on the one hand, I guess it is targeted. On the other hand, it is all three. Do you see this as sort of a jab in boxing terms?
Well, listen, it's unprecedented that they're hitting all the Detroit Three at the same time. I mean, the union's been around for 88 years, and the new union leader, Shawn Fain, wants to show a break from the past. You know, I think, listen, at the end of the day, Fain wants to demonstrate the power of the strike and the ability to use it. And it's meant to spur negotiations, as Phil was saying. It's meant to accelerate them rather than paralyze the company. So as they see progress or not, they may decide to go after some other plants, but not paralyze the entire company. And it has the benefit also, they don't have to deplete their strike fund by having all their employees across the plants go out on strike.
So do you think so-called paralysis or forced paralysis is off the table from the union standpoint? And do you, on the other side, see any sort of broad measures to export production in retaliation is also off the table from the D3 side?
Well, I think that's a longer term issue, depending upon what they end up agreeing to in this negotiation. I think, you know, Carl, at the end of the day, I think the unions, they're most focused on the wage increases. So I think the Detroit Three are going to be focused on that, and the proposals they put on the table, they may have to move those up. The union's going to be focused on this Tier 2 acceleration of workers that get to what they call Tier 1 status or full pay status. And the union's going to focus on temporaries and limiting those at plants. You know, I don't think at the end of the day on the OEM side, they're going to be focusing on just keeping both themselves and the UAW at the negotiating table, keep communicating, keep, you know, bringing proposals back and forth. The automakers also have to keep in mind, what is the victory speech for the union head when they get a tentative agreement? Because ultimately that has to be ratified. And if it goes extended, to your point, Carl, I mean, listen, there's, you know, actions that some of the OEMs could take on potentially, you know, shutting down plants, not a lockout, but, you know, saying it's a part shortage. But your point about moving products and plants out of the country, that's going to come down to if the OEMs are forced for some of these non-wage demands such as pensions and healthcare improvements, et cetera, then the OEMs are going to be very rational about it. They're going to look at their competitiveness, and if they can't be competitive in the U.S., they're going to have to move somewhere where they can be.
Well, Mark, I mean, you know the cost structure of Ford, certainly, and probably have a good guess at the others. What can they really take here in terms of not just the wage increase, but the overall compensation when you include the benefits you were describing?
Well, David, it's a little bit of a moving target, right? Because traditionally, the automakers, the Detroit Three, were competing against the import brands, which are non-union. And right now, all-in wages for the Detroit Three are about $65 an hour versus $55 at the non-union plants. So any movement upwards is going to increase their competitive gap. Then you lay over Tesla, which, the last contract they weren't a player. Now they're a major player. Their wage rates are about $45. So in terms of what they can take, listen, the automakers can't, plead poverty because they've had, very good the last 3 years profitabilities and margins because of COVID and a number of other things. So they're going to have to increase their costs. The key is to do it in a way that doesn't add even more structural costs, which would accelerate that gap versus the competition.
I'm thinking about other sort of bigger picture, potentially more longer term implications here for investors that pay attention to these stocks. The companies all have pretty ambitious growth plans when it comes to EVs and ramping up EV production. Does this set them back? Does this have to move into the next year as they have to play catch up once these workers come back?
Well, those plans are, already in motion in terms of building up not only the assembly plants, but the battery plants. I think the key thing, Sarah, and nobody's really talking about this in the negotiations right now, but one of the things that the union wants is the ability to organize these battery joint venture plants that the automakers have set up with battery companies, as well as some of the new plants that are going up in the South to manufacture the products. That's going to be very important for the union because that means membership growth. At the same time, the automakers are going to say, listen, we're already, losing money on EVs. We have
Hi, hello. I'm back here. It took me a little bit longer. I guess the trade has been completed. The trade was this, the huge, all of this inventory from the overnight was above this level. All the market was long. These loans have been forced out, have been forced to liquidate. The momentum the market had from this area, from this accumulation of weak long inventory, just crush all the loans from this market hit. It took this low out, the pullback low, which, as we talked before, rejects this high, come back inside the 6-day range, and is looking below yesterday's range. All those are signs of a negative market. Everybody knows now the market is down. So what we're going to do when the market is down, we are going to sell, right? Selling, that's the trade. Everybody's selling now. Now, the potential destination of this movement, when I say the movement, it doesn't have to happen the same day, necessarily. Can be, okay? It can take a couple days sometimes, because notice how much time it took for this market to take these highs. Right? You have this high here, second day, 3, third, 4th, 5th, 6th. It took 6 days for the market to take this high. Now, to come to the opposite side of the range also can take the same amount of days. It's not necessarily that fast. Now, the market is back inside this range, the 3-day range, the 5, the 6-day range, whatever you want to call it. It is the buying is just, man. Notice where the market is selling from. It's selling from this low, from yesterday's low, which happens to be also hardback. It was a pullback. That one is no more. Now we have a pullback from the overnight yesterday. It is coming from the second pullback from yesterday's overnight. If you remember, we have a spike that, this was before the spike. This is very questionable. It's coming from there, and before that, we have the rally high. When things changed this day, we have the rally. The market was going high, trying to go lower, higher here, higher. The last thing I want to be here was short. That being said, the market broke here, the market breaks here, and then there's a change of direction. The market started going higher here. The action started to the upside, and as long as this high remains the next day, this movement, the action is to the upside. The market never come back close to this. Now the buying now is coming from this level, which makes me question this low. The next C is coming from this level, which is the overnight, right? Which is an overnight reference. If I'm going to open, let me see if I can add another. Okay, let's add this overnight here. What is that? Look at this. Right? This is the first pullback the market had. And what was here? This was the last transaction of this day, exactly to that. The market is coming exactly to that, which tells me what kind of traders are buying this market. This tells me what kind of traders are selling, the same kind of traders are buying. So there's nothing serious here. Be very careful. What is adding a risk to today's, I guess, let me add something else here. It could, I didn't have this low here, this overnight low, because I thought that having held here, this will be more relevant. The market can see this held back, but the way how this market is trading, there could be something here as well. Okay, that could be something there. Let me remove this. Okay. Now, value is lower. What traders are doing is, when value is lower, what you do is you sell rallies, right? You sell rallies. That's the trade. That's the direction of the trade. Now, be aware that today is a particularly special kind of day. It could be tricky today. I don't like to trade these days, to be honest. I don't like to trade unless I see something. There was something here. Okay? This trade happened. This happened today. This one. Right? This is a prominent overnight POC. This is prominent OC. I'm going to name it or put a date to it. It's too far for the current trade. Now, this high, 3 white overnight high. Actually, more than 3 is like 10, something like that. Okay? Consider this 3, 6, 7, 8, 9, 10. I think there's something like that here. Wait, it's really a question as well. But the 4 level market trade, the less relevant is become. This overnight reference has become. Just imagine, well, you are short here. These shorts have cover when the market come down here. When the market come down here to this half back or to the 50, they just take cover. They don't stay in the market that long. They don't stay in the market that long. Alright. How much volumes do you have? Let me check. Uh-oh, what are you? 30% is declining. Significant decline here. 30% is kind of like something there. 20% decline. That's not bad. 30% higher is still good volume. Just enough volume to push the market lower. Once the market gains, the market changed because something happened here. Right? When the market took this low, there are many signs of change here. Market come back to the 6-day range is one thing. Come back below yesterday's low is another thing, which gives more weight to the fact that the market has come back inside this range, because the market could have come back inside this 6-day range, but not taking this one. We still give some odds to the upside, a higher odds or better odds to the upside. Now it's in liquidation mode. Next reference, half back here. It's just too mechanical, man. The way how these markets have been trading is accumulation of volume, weak references, correction. I haven't seen too many trades in the intraday. It can be more like the big. Maybe I am changing. Maybe I am seeing the market in a different way. Just let me know. But I haven't seen too many opportunities in these markets. Io parlare italiano. Okay. Now, did you see that spike to the downside? That spike stops being hit. That's a trade. That's an action of that happens a lot. Traders with enough capital just push the market lower, boom, 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 and boom, because they know where this stops are. They know where this is not a good level, and there were stops here. We have B and C lows then right away, and the trade is just taking. They push this market. We don't know because they have the power to do that, but the goal is just a couple of ticks. Just a couple of ticks. How many points do you have? We have. Actually, just 5 ticks here. God, only 5 ticks. Yeah, there we go. And that's the trade. That's it. Only that. If there is something serious here, the market comes back to this level, and the next time keeps going lower and lower. That represents something serious. But you see, you saw what happened here. Now the market has these. Sometimes traders don't understand this kind of movements. They just calm down. Oh, the market's back in. Let's keep selling. Just they end up selling at the low of the day. Right? It happens. It happened all the time. It happened to me so many times, man. Until I understand what really these things are. Notice where this C is coming. Okay. Now, let's do some graphics here. If I have a chart, a distribution chart, okay, I'm going to name the trades here. You remember distribution chart, innovators in this part, yearly adapters over here, yearly majority here, late majority here. The bulk of the this would be by the way, this distribution curve, right? The bulk of the money is made in this area, the yearly and late majority. And laggards is when traders finally understand, the market is doing something, and they finally have confirmation or whatever, and let's go. No. This could be, I don't know, are we in this stage somewhere in here? I don't have anything clear here, to be honest. But this part of the trade, there was definitely here. This was the innovators here, up here. What they were pushing when you saw this trade here, okay? You saw this trade, this big accumulation of volume of stops around this level. You saw that's the innovators, okay? This could be the yearly adapters, the overnight, the yearly majority. Don't know. I don't know. This I guess we could be in this part yet. I don't like the way how this is coming from this level here. Some mechanical trading happening here already. Now this low. Notice what happened with the stops, right? We have stops being hit. Now we'll come back through that level. This weak level has been cleared. Now the potential destination remains this one. None of the weak references in the lower side have been repaired yet. All of this movement and those references remain there. Market has, I think, is quite short now, very short. The market has come back below the late rally high. This reference, the change that happened here from this day It's no more. Right? This is the market has taken that level, so the market has changed in several levels here. First, coming back inside here, coming back inside below this, coming out of this range. Now we have a 3-day range, and the ultimate destination could be this low. Now, do you remember when we talk about these levels? Coming back inside this area, right? It needs to have volume. Right? Once the market takes this level, these accumulations of volume out, for example here, to go higher it needs volume. There's nothing here. My bad. There's nothing here. There's accumulation of volume here. My bad. I'm sorry. I guess I'm confused. Okay. I wanted to see. Do you remember we talked this in the morning? I don't want to see something like this here. Look what happened here. Accumulation of volume has took this low. Now below this area, for the market to keep going lower, notice that what do we have below? Nothing here. Nothing here. Nothing here. This volume has been taken out. To keep going lower, the market needs real pressure, real volume to the downside. Do we have that? We are having that. Right? We are having 50% in the first period, 30% in the second period. 30% volume higher relative to the previous day. That's some volume there. Right? Do you remember? I hope you remember this what we're talking about. This is the daily profiles. This is the current data that's been printed out. It's not done yet. Notice the accumulation volume is being built down here. There's no taper. Now the market has broke through this accumulation level, but there's nothing here. If the market has volume here, the market should have no inconvenience going through an area that has really low volume. If there is no acceleration here, the market doesn't keep going lower here, and it rather start building volume here or dries, there are low walls the market can take these lows as well. So multiple things or scenarios or that can develop here. And we got to monitor each one. Monitor for continuation. That's the thing. Right? This is pure momentum here. This is liquidation. These longs are being squeezed here. This could be a day than when you think, oh my God, this market is never going to stop breaking. Never. And when they finally give up, that could be, that's always, when you have a spike that moves really fast, that usually is the end of the movement. We have one kind of movement down here, which was the stop, hunting stops here. The market has moved through, has took the overnight pullback here. We got half back has been taken as well. Let's come back outside this value area. Now, this level here is the base of the spike of the overnight of this day. Do you remember CPI? That is the base of the spike. At the low, that spike is down here. And other things to keep in mind. Things we need to keep. We need to keep information in the background, and not to trade just price, but to have a background. 57 minutes, 3 more minutes in the current period. volume is, you have another accumulation of volume on the other side. Each time is less and less. It doesn't mean the movement is going to end. I'm curious to see how much the VIX is. It was very low. Maybe 15 or 17. My God, look at that VIX. 13.50. God damn. The market is not paying attention to this break. For sure. God, 13, less than 14. Boy. This is a tremendous. Now, what do we have in the lower side? What could be the potential destination of this trade? Some volume can come, some buying can come around the 4,500. It's just, and this low here is not that far, right? Only 15 points, something like that. You can come out to the 90. It's just coming with fury here. I guess we may have something like 20% this time. Volume is decreasing here. Yeah, 20%. Another week low. One distribution here. Something serious will keep or will form. Will not close this distribution. Okay, we start building value below this one. You don't want to see the market closing this distribution, which is what happened yesterday. Yesterday we had this day, and every time the market had a distribution, every time first it closed the gap. That's one thing. Then every distribution closed, every distribution closed, every distribution, and the distribution is closed. Serious movements, serious directional move. Okay, and something that can be expecting to last a bit longer will not close this distribution. Now, if the market makes or forms multiple distributions that changes, it makes the movement too emotional. It makes the movement risky. So there has to be a balance there. Too much is also not good. All right, something else. When the market comes out of the previous day range in the first period, that's also a sign, right? That's what happened today. The market come out outside the first period. Outside the range in the first period. Okay, that's a sign. To the downside is a sign of weakness. To the upside is a sign of strength. Okay. Market's pushing towards the 4,500 here. Let's see if some of these prints are retraced here. It's kind of like too much here. something in the upper side. And I have these references in the upper side just to see if the market, for example, comes back and sells from here. Okay, man, you know that's not serious because it's selling from this value very low. Another reference could be this opening. I mean, this halfback here. Market sells from this halfback. This tells you who is conducting, or who is the dominant force in the current market. All right. Kind of like a big stream, long stream today. And this kind of days, you will see, if you are present in the market, this kind of days tend to attract traders. You will see a lot of traders here. This market has got too short, man. It's just too short. Do you have the direction? Fine, good, great. But I think it's just too short now. It is too short now. I didn't take the market here. I didn't take the market here. I didn't take the market here. I guess it's time to go short now. I'm not saying that it is not going to work. What I'm saying is the risk has increased here. I think the market is too short. Professional traders have already hedged or have taken profits, or maybe have trimmed their positions. It's not always we have this kind of movements, and the way how trading works is you got some solid 10 points. Oof, that's good, right? You hedge, you hedge, you lock your gains, which is always the best decision to make. Also, at the same time, there's a tendency in traders that they, this kind of days they tend to, to build huge positions as well. Because they understand, when you understand what's happening here, what's happening here from this day here, this day cut, they can smell it. Right? And you should have, or we should have that with time, with experience. We still, we make this. The question is what you were thinking yesterday, what you were thinking on Wednesday, and what were you thinking today? If you saw this overnight today, I usually rarely wake up or rarely step in front of the desk early in the morning, But today I had something to do, and I saw, God, man, this is good. There can be something here. There can be something here, right? Today is one of those days. I think this movement is overextended now. The market has seen now. Do we have below? What do we have? Let me check. Let me check all charts. It's very confusing. Okay, for me it's very confusing. All these charts are not in sync. The weekly, daily, and all this big gap the market had. This big fake gap the market had. Yes. Notice that. Notice this. There's a range here. This is September, right? My bad. This is December. There's a range up here, range down here, and market's building value inside. In between these two, we have accumulation here, and accumulation here at the center. The adjusted contract shows a different story. Okay, this is an adjusted contract. This sees accumulation above the 50, and the reality is we have accumulation but below the 50. We have a breakout here. You know, we talk. I was talking to a friend about this. Can you see this one? What sometimes happens. You know, this is what retail call this. This is a bull trap. Right? There's nothing. There's no traps here. It's just trading going on here. You got breakout this line, this trend line that was forming, and now its market has come back inside this range. But this is something worth to observe, because the same thing. This is what matters here is what the message the market is delivering when you see these kind of things. Sometimes it's could be a self-fulfilled prophecy. When you see, what do you see here? That I couldn't avoid to see. What do you see here? For example, this is very popular in retail. This is okay. This is a head and shoulders. Oh my God, this market is going to break. I have to be in the short side. And sometimes, these pattern things become a self-fulfilled prophecy. Too many people is involved in that, and they just make the prophecy a reality. It happens all the time. Huh? Now the bond market remains in range, and that danger area. It's kind of in the intraday. The low is kind of really questionable, man. Now, check this out. Where this market has come back to. This value area from this day. Can you see this? Who is doing this? There might be a huge accumulation of volume, but the trade is being conducted in the same way here. I guess big trading, big companies, big money doesn't care about this break. This is just an adjustment. There's a liquidation of the loans, a liquidation of weak loans, and they'll keep buying here. But who cares? Alright, who cares? Who cares about that? How long has been the stream up? 3 hours? Alright. Now, this is a trending market. We have an intraday that is trending to the downside. Most traders, sometimes there's a good amount of traders that start to buy this market just because they think it is low, and that's trading against the trend. And many times that kind of activity, which in this case would be buying, is what fuels, what provides, that keeps providing the fuel for the market to keep breaking, which is the case today, which can be the case today. When the market rallies, is the opposite. Oh, this market is too high, it's time to sell. And that actually can fuel, that can keep fueling the movement. All right. It's not unusual as well to see some kind of rebalancing of inventory or some kind of rally halfway through the season, through the session, not through the season, through the day, through the session. Just for that rally, you know, that this kind of particular traders take some gains here. Pride, oh, okay, I cashed the low, right? Just to see the market going in the same direction, or in the opposite direction, because most traders don't understand that can be just a rebalancing and readjustment of the inventory that has got too short. Okay, all right, guys. Unless there's any question, I wish you a good rest of the day. Stay safe. Happy. Good luck. Bye bye.